It's that time of year when we set property tax rates. Taxes and property valuations, those are often considered bad words for most people, and we get it. Most people either want to pay less in taxes or feel like they've received a good return on the value of their tax dollar. Taxes and property valuations receive a lot of attention, especially in reassessment years, like a year like this year, when assessed valuations often increase. Most people assume that the percentage that their valuation increases means that the amount that they pay will increase by that same percentage, and that we, as your local government, also receive that much of an increase to our budget, and that's not how it works. We wanted to take a minute to walk you through the math equation that goes into setting property tax rates. So here we go. First of all, property tax rates are voter approved, every single one of them. In Missouri, we aren't allowed to increase tax rates beyond what was approved without a vote of the people. In 1980, there was a constitutional amendment in Missouri that restricted the amount by which taxes could be increased without a vote of the people. It's known as the Hancock Amendment. In order to comply with the Hancock Amendment, the state auditor's office gives us a calculator. The city and other entities enter the assessed valuation information into forms, and the calculator establishes that rate for us. Effectively, the rates are already set. So here's the quickest way to think about the Hancock Amendment. And we in government talk about it a lot because it does affect how much revenue we receive. But our residents or property tax owners maybe don't know all that much about it. Effectively, it limits how much additional revenue we can bring in. The Hancock Amendment is not intended to make sure every taxpayer pays the same amount of taxes as they did the year before. But it is designed to make sure that the government that spends the tax money has approximately the same amount coming in each year. In years when assessed valuations increase, tax rates decrease. You may hear us talk about that as a rollback because the taxes simply roll back, lower than the voter-approved rate. In years when the assessed valuations decrease, tax rates don't increase. In both cases, the idea is to provide the governments with the same amount of revenue. Property taxes are adjusted to avoid additional revenues from rapid increases in valuations. So let's look at an example of how valuations and tax rates come into play. I'm going to use an example from 2021, 22, and 2023 so you can see that change over time. So the counties told us that in 2021, the property valuations in the city of Pleasant Hill were about $135 million. 2022 was not a reassessment year, and that meant that most of the property tax rates stayed the same. In 2022, the total valuation for the city is now $139 million. But as you can see from this breakout, $3.3 million of that was from new construction. So when the state's property tax calculators are determining compliance with the Hancock Amendment, they're looking at the same properties. Think of it more like an apples-to-apples comparison. In this case, the same properties that were included in that $135 million number in 2021 are compared to the same properties in 2022, which are valued now slightly more. It's $136 million. As you can see from the bottom of the slide, that only represents a 0.4% increase in property valuations, which makes sense for a reassessment year. The state tells us, though, that we can only generate additional revenue on the lower of these three items, either assessment growth, consumer price index increase, or the maximum allowable under the state's calculators, which is 5%. So in 2022, the lower of those three items was that assessment growth. And we were only able to receive less than 0.5% more in taxes on the same properties than the year before. For us, that amounts to a total of about $3,300 in additional revenue for the city, or about $1 more per house for the entire year to fund your operations. As you can imagine, our expenses increased by more than just that 0.5%. With that minor amount of growth, you can see that the tax rates didn't increase year to year. It stayed the same at the $1.1876 per $100 of assessed valuation. It's effectively no growth in the tax bill for homeowners, but it's also not that much revenue growth for the city. Now, we do get to collect new taxes on growth, but the growth doesn't play a factor in how we set that tax rate. So for some, this may seem like it's new revenue and that growth is a way to increase the city's budget. And that's true to a point, but you have to remember that with that growth comes increased demand. There are potentially new streets that need to be maintained. There are more people that utilize the park system, and the police call loads will increase. New construction is simply paying for their share of the services. And sometimes we have enough staffing and resources to absorb that workload, but over time, that new construction places an additional strain on our services and resources, and we'll have to add additional things. So if I'm using this as an example, on that $3 million in new construction, it provides an additional $2,000 for the park system. And even though we didn't see an increase in park acreage during that time, there are now more people that utilize the parks that require additional cleanup, or we have additional youth sports enrollees that increase the demand on the fields. And for reference, in order to fully fund an additional park maintenance staff worker, we would need over 3,000 homes to be constructed at an assessed valuation of $112 million. And that's a lot. So let's look at what this looks like in a reassessment year, where it's a little bit different, not as stable. In a reassessment year, we see dramatic changes often in assessed valuations. And I think this year, people would agree. Again, the state requires us to look at similar properties for the comparison of that permitted assessment revenue growth. But as you can see from the green circle on the top, we're taking that entire $139 million of assessed valuation from 2022, and now we're comparing it to the similar properties in 2023, which is now valued at $153 million. That's almost a 10% growth in assessments. Now, again, we're taking that lower of the three. The state indicates that CPI was 6.5%. So we're capped at only collecting that 5% additional revenue from those same property valuations. And that 5% amounts to an additional $41,000 for city operations. That's around $13 more from average homeowners to fund vital services like police, parks, animal control, streets, and snow removal. The city also collects property taxes for previous debt issues. The state allows us to set the property tax rate for debt high enough to make the upcoming payment plus up to one additional year's worth of reserves. So whenever we're factoring debt into our tax calculations, an average property owner will pay about $25 more to the city than they did in 2022. That's far less than that full 10% reassessment that we see. The concept of assessments go up and tax levies go down comes into play here. The city's anticipated tax rate will decrease in 2023, and we're thinking it's going to be an average of about 4.5% decrease, even though the assessments increased an average of 10%. Each property is different in the calculation of how you pay and how it was assessed. All the numbers that I'm showing here are kind of an illustration. But we looked at a sampling of properties that indicated that property owners will be paying the city an average of about 6 to 7% more than they did to the city in 2022. Obviously, for some, it will be more, and others it will be less than that amount. And that's going to be based on what your individual property rates look like. So for the next steps of this process and what the approval process looks like, a public hearing date has been set and it's been advertised. You can provide comment to the City Council on August 28th at 6 p.m. It's important to note that the city will publish our rates at the maximum allowable. What will be advertised in the newspaper and what will be included in the City Council packet is the maximum amount. We cannot exceed what you see. But that's not necessarily what the City Council will adopt. Historically, we've seen rollbacks of that debt service levy to the amount that's really needed for the next year's debt payment. We don't hold that additional reserve. And then finally, the city has an obligation to adopt a rate and file with Jackson and Cass counties by September 30th. I really hope this was helpful in seeing and understanding how property tax rates are established.